Tesla is facing some tough decisions. According to an internal memo obtained by Reuters on Monday, the company plans to lay off more than 10% of its global workforce. This decision comes as Tesla navigates a downturn in sales and increased competition in the electric vehicle market. With the news, many are asking about how robust the electric vehicle market actually is and what the future holds for market-leading Tesla. With more on this, we go to James Lalli, an independent automotive analyst based right here in Montreal. James, welcome back to the program.
Good morning, Elias. Thanks for having me.
Well, so what's your reaction here? Let's start off with the layoffs, right? Because the headlines don't look good, right? When you hear 10% of the company will be laid off. What's your reaction to that news?
Yeah, the headlines could seem alarmist, but it's important to keep the context in mind. So Elon Musk is a manager who really strives for efficiency, strives for productivity. And periodically, Tesla will go through these big mass layoffs. Like it happened in 2022, where they laid off 3% of their total headcount. 2019, they laid off 7% of their total headcount. 2018, 9%. So you see, it happens sort of every once in a while. And he's just obsessed with efficiency. He believes that smaller teams actually perform better. And I think, he makes some good points there. He doesn't really like middle management in companies, so he tries to keep the organization as flat as possible and keep communication flowing as freely as possible between all levels of the company. So I think it's a part of it is corporate style. Part of it is also Tesla has faced some challenges in the market. Their products are starting to become a little bit more dated. The Model Y launched in 2020. They just launched Cybertruck, but before that there was really nothing else. Model 3 was 2017. So I think they're facing a little bit more competition. Particularly in China. And they also struggled with, in Q1, they struggled with some production issues that affected their sales.
And let's just talk about those delivery numbers that I know were quite disappointing to start off the year. And, I've seen what you do on Twitter and X. You analyze the situation quite a bit there. How do you describe, that was a drop. Any way you slice it, there was a drop for Tesla. And, of course, everyone's saying that EVs, and I believe it, EVs are the future of the automotive industry. How do you explain that drop?
Yeah, the drop, so just to give everyone the context here, the drop, Tesla delivered almost 387,000 cars in Q1 2024. So that was a drop of 20% quarter over quarter and 8% year over year. The quarter over quarter part is not that rare. It's happened in the past where Q1 was a little bit softer than Q4, but the year over year drop was really the noteworthy aspect here. The only time, from 2016, I didn't check before 2016, but since 2016, the only time this happened where deliveries dropped year over year was actually Q2 2020, and that was because COVID, forced Tesla to stop production in their, two big factories, and so it's noteworthy. But at the time, however, if you go back to 2020, their days of supply actually shrank from 23 to, I think it was 13. So 23 to 17. So they had less supply, and that was really what caused the drop. This time, their days of supply actually increased from 16 to about 30. So there's just a lot more capacity, a lot more supply than demand. So it's a different situation now than it was back in 2020 for Tesla.
What's the direction right now of the company? Obviously, Elon Musk, you mentioned his strategy when it comes to being lean and being efficient here. But where is he driving the company right now? Is it about cars or is it about something else?
Elon Musk has always been obsessed with the idea that cars will become autonomous, and he wants to be the leader of that revolution. He wants Tesla to be the one to develop the fully autonomous car. And he's sort of been steering the company in this direction for several years. And really, this is the year where I think he sees what's happening with the auto market. He sees that there's other competitors that are coming into the EV space and that there's potentially less profit for Tesla to generate there. He's really putting all of his eggs in the full self-driving basket. In other words, making the car autonomous, because that has the potential to drive significantly more shareholder value and revenue for the company longer term.
How do you view that, right? And for the record, I have a Tesla and I have this software, the quote unquote full self-driving software, which is now no longer called beta but supervised. I have it. It amazes me every day, but it's not perfect. It's not quote unquote ready for prime time yet. How do you view that as placing all the bets on the company in that column?
It perfectly exemplifies his management style. He's always been a high-risk, high-reward type of investor, and that's really what led him to invest in SpaceX back when it was very risky, and also invest in Tesla back when everyone thought he was nuts, because most car companies go bankrupt, right? It's very, very challenging to become cash flow positive and to sustain operations as a car company. So this is something that I think, from a fundamentals perspective, the upside, the opportunity is huge. Personally, as an investor in Tesla, and I used to be an investor in Tesla, I'm not an investor anymore, but I'm somebody who's a little bit more risk averse. So this is another high risk, high reward play. I don't think he necessarily needed to go as aggressive as he has, and maybe could have maybe done a few things differently. Of course, hindsight is 2020. But I think what we're going to see for Tesla now for the next few years, we're going to see relatively flat growth on the vehicle side. There's just not a lot of cars in the pipeline. Cybertruck is ramping, but it's the volume won't really move the needle too much on growth year over year. And he's really betting that full self-driving will, the uptake on full self-driving will drive with the revenue and the profitability for the company moving forward.
We're with the independent automotive analyst, James Lalli. He's based right here in Montreal. James, I sense an enormous amount of skepticism. And by the way, every time I talk about electric vehicles, I get the skepticism on the text line. The people that believe it's a fad, that gas vehicles will win the day. In your day-to-day looking at the market, what's your response? Because you must encounter that at times as well, whether it's with friends or family members, that kind of thing. What's your counter to that notion that this is actually a fad? EVs aren't going to make the waves that a lot of people believe.
I don't think it's a fad. I think ultimately it'll ultimately become a lot cheaper for manufacturers, like in the long term, to manufacture EVs, and those cost savings will be passed on to consumers. And so it comes a point where it'll be much less expensive to buy an EV that can drive as long as you need it to drive, and is much cheaper to operate than it is to operate a gas car. That point is coming at some point in the future. It's probably not coming as quickly as maybe some people had expected it to come a few years ago. When you're looking, when the EV market was just when there was an EV craze, an EV bubble in the stock market, essentially. But that point is still coming at some point in the future. I'm not sure that EVs will displace necessarily 100% of all drivetrains. So I think there's still going to be a role for internal combustion and particularly hybrid or plug-in hybrid electric vehicles. I think those are going to play a key role as well in the future. But I don't see, EVs are still growing significantly year over year. Tesla's market share is not, because they were the first mover, and now other players have entered the market. So from a purely electric vehicle share perspective, Tesla share is decreasing. But overall, if you look at the share of electric vehicles versus internal combustion, it's growing year over year.
And let me ask you this, James, because this has been a debate, right? Tesla hardly advertises. I think they're dipping their toes in advertising here. And I think there is a sense that some people just don't know. They don't have the educational opportunities here. Where do you stand on that when it comes to the direction, the push from Elon Musk, by the way, where he hesitates from that side of things, advertising? What are your thoughts on how the company has handled that aspect?
I'm firmly on the side of they should be doing a lot more advertising as the market leader, as the innovator in the space, and as the best known brand and the brand that has the most to offer. I think from an electric vehicle perspective, we can see this in surveys, market research. We see that consumers think that electric vehicles are more expensive. In some cases they are, but in some cases they're not. Especially in the U.S. with the IRA tax credit, there you can buy a Model Y for mid-30s, which is $10,000 less than the average car sold in the United States today. So cost is actually not quite such a barrier, but people don't really know. People think Teslas are a lot more expensive than they really are. And then the other thing is there's other sort of psychological barriers that consumers have that prevent them from considering electric vehicles around charging, around range, around longevity, and sustainability. These are all questions that people have that are, justifiably so because it's a new technology. And Tesla really hasn't played the leadership role in filling that space with answers and really solving and countering some of the rhetoric and some of the sort of misinformation that's being put out there by other companies that don't have as much to gain, right, from electric vehicles doing well.
James, let me ask you about your crystal ball for the next year. In a year's time, where do you think the EV market is at, where Tesla's at?
Well, it's a very interesting question, Elias. Like I said, Tesla's at this crossroads right now where if they don't have FSD, if full self-driving doesn't deliver strong growth, and people don't start buying it, the uptake doesn't, if there isn't a significant uptake, I don't think Tesla financially in the next few years, maybe a year or two, will be doing very well until they're able to commercialize a mass affordable electric vehicle that can reach a broader audience. So I'm not too optimistic about the financial future. It'll obviously perform well. It'll still survive. I'm not saying they're going to be going bankrupt or anything, but financially, I think they're in for some tough times, and I think we're seeing that in the stock price. Tesla is at 40% of where it was back in 2021, and the market is almost at all-time high. So I think the market's sort of discounting that already. Overall, electric vehicles, I think are going to continue to progress. We're going to continue to see more players enter the space, and the technology will keep getting better. So I'm very optimistic on the future of electric vehicles in general. Let's see what happens with Tesla. If they're right about full self-driving, and if FSD, which you said you drive and you enjoy, and it has been very impressive. If that continues to progress, and if it actually does reach the point where it's safer than humans, then everything changes. And then we'll be having a completely different discussion, at this point next year.
James, we got to leave it there. Thanks so much for the insight.
Thanks so much, Elias.
That's independent automotive analyst James Lalli.